Good afternoon, everyone, friends, family, fellow investors, fellow entrepreneurs. It's your main man, Dave P, with RJ Pepino, the Cream Real Estate channel, where we talk about everything cash flow, real estate, money, entrepreneurship, inspiration, giving back, building wealth, creating freedom. Let's go. Mr. Pepino, what are we getting into today?
Well, we're talking about why we love affordable housing. It's and specifically in the residential single family space because that's what we specialize in. We have the majority of our portfolio in this asset class, and affordable housing. We're going to go through the points of why we love it, why we've invested we've been doing this now for over 12 years now, and I want to touch upon that, and then I'm going to send it back to you, and you can also explain to us why you like it as well. I'm going to touch first of all. Here's the main thing, right? When you're in real estate, the reason why we get into real estate is that because we have options. There's so many ways to make money, and you always want to have plan A, B, and C when you go into a real estate deal. Well, the reason number one reason why we like affordable housing is because when you're in a affordable or attainable market or zone, you have access to more buyers. You have access to more renters, and you have way more options when you're doing, if you're going to rent it out, if you're going to fix it and sell it, if you're going to fix it and keep it, and stuff like that. You just have way more options. So your exit strategies are a lot more because your pool of buyers are a lot bigger. Number one is FHA loans, right? So if you're going around and it's your first home, you're capped at the amount of the price on a first time home buyer loan. I think it's like 375. But guess what? Guess how many first time home buyers are out there? Probably millions, and in your market, thousands. And so when you're in that attainable price zone, you want to go after the most amount of buyers so that you can get renters or sell your house. And so that's the number one reason why we like it. And then also too, when you're thinking about your neighborhoods and where the sweet spot is, where you're going to get the best bang for your buck, it's going to be in the affordable housing markets. It's going to be in what we've seen in the B markets because it's not so expensive, right? When you start in our market, we're in Columbus or we're in Ohio. Main market is in Columbus. The median house price, I believe, is like 170 now. It used to be lower than that. It used to be around 150. So it's our market's increasing in price. But when you get to the higher price points of like 350, 450, 550, your rents don't catch up to the price of your house, which makes it not so good of an investment. And it's going to be harder for you to go to the bank and refinance. We talk a lot about the BRRRR strategy here on our channel. And we've got a couple big BRRRRs, that we're doing, and definitely go check out that video. And because we go in depth of how we're doing it, but being in the affordable housing zone allows us to get access to the most buyers, the most renters, the best financing, the best return on your money. And all in all, I would say that that's the best way that you could hedge risk in any real estate market, because when the market does shift, because it's cyclical, if you're into affordable housing, you'll have way more exit strategies to hedge your risk.
I
And that's
think that's very well said. Supply and demand is what it comes down to. So what I'm hearing from you, RJ, is the most exit strategies. And it's not just, when you're building a portfolio, and RJ, you know this very well because you and I have built a portfolio. When you're building a portfolio, once in a while, you need to pair off a couple properties to raise cash, to raise your liquidity, right? You get that very well. So when you have the most amount of exit strategies, like you're explaining, if you need to pair off a property here and there while you're building your empire, building your portfolio, you want to be in an asset class that provides you the most exit strategies. What, like RJ just said, when you're in that affordability zone, you have access to a ton of FHA buyers. Everybody's pretty much an FHA buyers. It's absolutely it's ridiculous just how many people will qualify for this if you did need to sell the property. And also just affordability in general. Like you mentioned, markets are cyclical, right? When interest rates go up, I think that is going to be a catalyst that really shakes up our economy, simply because we're so riddled with debt. I mean, people are paying ridiculous prices for houses right now. When rates go up, the affordability is going to go down. It's not going to be as easy to acquire these houses or charge these high end prices. So people want to be in affordable housing. So, let's pretend things change in the economy. It doesn't matter if the economy is good or bad. People are cognizant of their monthly expenses. So when you own assets, and what we're saying here is we believe affordable housing, affordable, specifically single family real estate, apartments as well, but really the single families gives you the most exit strategies. But when you're dealing with that asset class, in our opinion and experience, it is the strongest asset class to hedge against any economic catalyst that can possibly happen, as well as the best financing you mentioned, RJ. So what people should understand is when you're dealing with these BRRRRs, when you're dealing with these refinances, the bank looks at something that is called debt service coverage ratio. So what debt service is, you have the debt, that's the loan. You need to service the debt, that's the payment that you are going to pay to service the debt. Coverage ratio, they want to see how much of the rent is able to cover the entire loan payment. So the bank is always looking at, okay, what is this property rented for? And then how much of that rent payment is going towards covering the debt service or the interest payment on the loan. And the bank wants to see at least 1.25. And when things change in the economy, they could get more strict on that. You can see this. So, when the banks start to tighten up, which inevitably it will happen, we don't know when, right? Nobody's calling for, predict, nobody has a crystal ball, but that's one of the little indicators that the bank will tweak to get a little bit tighter and more conservative. It could very easily go up to 1.35. So what this ratio is, everybody, is let's pretend your mortgage payment is $1,000 per month. If your DSCR, if the bank's requirement is a 1.25 coverage ratio, they want to see that it's rented for at least $1,250 per month, right? So the bank is not going to provide you a refinance unless it hits a certain DSCR requirement, and you're very easily able to hit this requirement in with the affordable housing sector. So we covered a lot: supply, demand, LTV. The best, most exit strategies. RJ, bring us on home, brother.
Yeah, I want to talk about this one thing real quick. And we have friends in not so affordable markets, right? And they're doing well. They're flipping houses. They're doing really good. And I think it was maybe a couple years ago when we saw just a little bit of an increase in interest rates, right? And a little bit of an increase in interest rates in the not affordable zones can be disastrous. It could be it could mean that your overhead goes from up by maybe like $4,000 or $5,000, and sometimes if you're in a market where there's like $500,000 properties and you're holding on to that paper, an increase in that interest rate could be, it could put you out of business because you didn't plan for that. But if you are in the affordable zones that we are in, even a slight increase, you're not going to get super affected because you're not going to feel it. It's because it's a price thing, right? It's a price thing. So I think we talked about a lot of good points today. Definitely check out below. We've got some really helpful links for you guys on how we find our deals. The systems that we use. Definitely click on those links and leave some comments. Make sure you hit that subscribe button. And if you guys got any questions, we will be doing a lot more videos like this. So I'd love to hear from you.
Let's go buy some houses. We'll see you on the next video, everybody.